Hello everyone, it is Melanie Pierce with Royal LePage Triland here in London, Ontario, and this is my friend Greg Baxter from Dominion Lending, and he's going to answer a very important question today for us. So, right now mortgage rates are going down, or interest rates are going down.
Yep.
Let me just correct that. Interest rates are going down and may continue to go down. So there's a lot of people who had locked in at higher interest rate mortgages in when it was higher in previous markets. But when does it make sense to look at your mortgage and break that mortgage because it's going to cost you less to do so?
Sure. What we've got to do is look at two different types of mortgages. The first type being a fixed rate mortgage. To break that, you have an IRD penalty. So those are usually typically higher. If you have a variable rate mortgage, those are based on 3 months worth of interest penalty. And so you have to also remember is that not all banks are created the same. Some banks have a different way of calculating the penalty. They use a discounted rate versus discounted rate and posted rate versus discounted rate. So we have to look at the lender for sure. And then on top of that, we have to look at if the spread between the two rates. So if you currently have, let's say, a 5% interest rate, and you decrease, and the rates currently are 3%, the 2% spread. When we get to that 2% spread range, that's when I start to look at and see if it's advantageous for us to break the mortgage. So what we would do is we'd say, okay, your payment today is this versus your new payment, and then your penalty would be X, and then make a calculation and see if there's a savings there for you.
Okay, awesome. So obviously, because you've got so many small details that may make it beneficial or not, you definitely need to talk to a professional and get the nitty gritty on that.
Yeah? I would, and like I said,
when you talk about it, I go, yeah, I'm going to talk to you. I'm going to say, hey, is this useful for me? So you need to talk to a professional, and
yeah, and I think that it is, like I said, it is, you need to look at who your current lender is.
Okay.
And look at the penalty it is to break that mortgage and the way that they calculate that penalty. Because there is differences between lenders in the way that they do calculate penalties. And so we just want to make sure that the cost savings is there to break it.
Okay. And I remember my question. I was like, I had a question, then it left. It's back. Bing. So the question is that dollar amount of penalty.
Yes.
How is that paid at the time? Because at this point in time, with things, our bills are really tight, food has gone up, everything's gone up. So you go, okay, I'm going to save this money, but there's this penalty. How does that get paid?
So another great question. So two ways, obviously, is you have the money to pay the penalty outright, or two, what you would do is you incorporate that into your mortgage. So if let's say the penalty was $10,000, you could roll that penalty into the mortgage after breaking it, and then increase your mortgage amount by that penalty amount to not pay it out of pocket.
Okay.
Yeah.
And is that always the client's decision, or does sometimes that is the bank says this is how we do it?
It's the client's decision. I mean, let's face it, the best case scenario is you have the money to pay the penalty so you're not increasing your mortgage amount. Just off the top of my head numbers, for $10,000 worth of extra mortgage amount, you're about $45, $48 per month that it's going to increase your mortgage payment by. So that penalty then, if you're rolling it into your mortgage, is going to cost you that extra $48 per month, and then you're amortizing that again over the 25 years
Right.
or whatever.
But obviously you're saving a whole lot more than that. So
you got it.
That's why it's useful. Okay, fantastic. If you guys have any questions about this or any other real estate and or mortgage subjects, we'll put both our contacts will be below, and you can just reach out to us. We're open to discussing all these elements. Okay?
Thanks, Mel. Great seeing you again.
You're very welcome, Greg.